IRS unveils sharper tax brackets for 2026. What Americans must know: the Internal Revenue Service has announced major updates to federal tax brackets and deductions for the 2026 tax year. Changes that could bring relief to many American households facing inflation pressure. Each year, the IRS adjusts income thresholds to prevent bracket creep, where inflation pushes earners into higher tax brackets, even when their real income hasn't increased. For 2026, these adjustments are particularly significant. Analysts project an average increase of about 2.7% across the board, with the lowest brackets seeing the largest gains. The marginal rates 10%, 12%, 22%, 24%, 32%, 32%, 35%, and 37% will stay the same, but the income ranges for each will shift upward. For example, a single filer won't reach the top 37% rate until earning around $640,600, while married couples filing jointly will hit that level only after $768,700 in income. The standard deduction is also increasing. In 2026, individuals will be able to claim $16,100, and married couples filing jointly will claim $32,200. Seniors will benefit from a new $6,000 additional deduction, designed to ease the tax burden for Americans over 65, especially those whose Social Security benefits are taxable. Estate planning thresholds are rising too. The federal estate tax exemption will climb from $13.99 million to $15 million, allowing more wealth to be passed on tax-free. One of the more notable policy shifts impacts tipped workers. Starting in 2025, tips will no longer be subject to federal income tax, a move intended to increase take-home pay for millions of service industry employees. These adjustments follow the implementation of the One Big Beautiful Bill, a sweeping tax reform passed earlier this year. The legislation aims to modernize the tax system, expand deductions, and adjust brackets permanently to better reflect current economic realities. For middle-income earners, these updates provide breathing room. You'll need to earn more before moving into higher tax brackets, and larger deductions mean keeping more of your money. However, higher earners may still face significant tax bills once they cross certain thresholds. Financial experts are urging Americans to start planning now. The changes could affect retirement contributions, estate transfers, and investment strategies. Advisors recommend reviewing your income structure and withholding rates early to take full advantage of the new system. Whether these new brackets represent true relief or just a temporary cushion will depend on how inflation and wages evolve over the next year. But one thing is clear: the 2026 tax season is shaping up to be one of the most consequential in recent memory. Tim Bars, especially for Daily Atlas News.